When I was going into work, they're like, why are you buying another property? You're risking everything. Why do you have property number 10? What, are you crazy? Like, you know what that's happening in the US? They're crashed. It's going to happen here.
Welcome to The Hard Truth. We're here with Gary Hibbert. We're going to talk about a long-term career in real estate.
And so that was the first time I got into real estate investing. And literally, for a joint venture agreement, it was like a piece of paper. And I just jotted down a few things that, hey, we would split the profits, or, you know, if there was any losses, that we would split that as well too. And that was it. That's how I got into real estate investing. And once I got a good understanding of real estate investing, and I realized that whether you were Donald Trump or somebody who was just trying to get into the game, you have to learn how to raise capital. And once I understood that game of like money, people, deal, then everything really kind of changed for me. And then from 2008 to 2014, I think I bought like 19 properties or something like that, somewhere around that range. And I was like, okay, I get it. It's not about having the money, it's learning how to attract the money to you.
Welcome to The Hard Truth. We're here with Gary Hibbert. We're going to talk about a long-term career in real estate. So investing for almost 2 decades now in real estate, multiple strategies, businesses, sustainability, all of those things. So make sure you stay tuned and watch this whole episode. All right, Gary, let's dive in here because I want to get to know more about you, your background. So tell me your background in real estate. How did you get into it all the way to where you are today?
All right, listen, so thanks for having me on the show. How I got into it, I mean, look, I think I should do a little bit of a backstory. I mean, I got into it prior to, I was in TD Bank, and I was 9 to 5, had 2 young kids, wife, but the problem was that I couldn't get ahead. Every time I got a raise, every time I felt like I was going up, money was just less for me, and I couldn't figure out why. And to make a long story short, what I realized was going to the bank, this is like for the 3rd time now, taking all my debt and putting it into my mortgage, so just refinancing. And my financial advisor left the office. I'm sitting there by myself. I look up on the wall, and there's the index chart. And the index chart kind of shows you, here's what the market has done for the last 50 years, whether it be stock markets, whether it's interest rates. And I saw inflation. And I was like, hold on a second. So some years inflation is doing 1 or 2%. Some years it's going up to like 15, 20%. And I did a quick math on the raise that I had at work. And that raise was like 1.4% the previous year. And I'm like, oh, I get it. I can't outpace inflation by having a job, which is just over broke. And so I'm like, well, if my house had bailed me out 3 times, what if I had 1 more property? What would that do for me? And in 2008, I went down the path of purchasing my very first investment property. And that's how it really all started, was just understanding. I think everybody now knows what inflation is. But back then, it wasn't really like a common thing that you talked about, right? Until you actually dive into the world of real estate and the printing of money and what is real money and currency and the difference, right? Gold and silver. And so I've become a very good student at that stuff.
It stands out more now. I can only imagine 2008, maybe you open a newspaper and it said inflation's high. Okay. But now we see
what causes it.
Yeah. What is that? What does that mean? That's the bank's problem. Is that my problem?
Right.
With the availability of information and the delivery of information today, video, YouTube, whatever that may be, that people are actually understanding that this means something to me.
Yeah.
Inflation. I remember in 2008, I was much younger than I am now. It didn't mean anything to me. Okay, inflation is all right. What does that mean? But I love how you put that into real context.
Yeah.
So 2008, you bought your first rental property. What did that look like?
Yeah. So the very first property I bought was it was a 2-unit, but it was an illegal 2-unit. Okay. So just kind of learning and understanding. And another thing as well too, there was a lot of fear in the world at that point in time as well too. So I talked to a friend and I started letting people know, hey, look, I want to get into real estate investing. I want to get into real estate investing. So my friend said, hey, listen, you know what, my dad's actually going through a divorce, and he wants to stay in the property. Would you buy it? And I'm like, yeah, I'll buy it. I didn't know how I was going to buy it, but I'm like, yeah, I just kind of started putting it out there. And I'll back up just a little bit. The reason why I just said yes was prior to that, for about a year or so, I was really trying to change my mindset. And I'm big on mindset. And I started listening to Jim Rohn, started listening to Brian Tracy, Zig Ziglar, like, some of the best
OGs.
The OGs, yeah, some of the best philosophers and mindset people out there. And to make a long story short, I came back to him and said, listen, you know what? I don't have the down payment to do this. I've got some of it. Would you partner with me? And he's like, I don't know if I want to partner. I'm like, well, listen, this is your dad. Like me, how about the two of us help him out? And he goes, okay, fine. And so that was the first time I got into real estate investing. And literally, for a joint venture agreement, it was like a piece of paper. And I just jotted out a few things that, hey, we would split the profits, or, if there was any losses, that we would split that as well too. And that was it. That's how I got into real estate investing, by finding a way to partner with somebody else. And then, learning that was the gateway into what kind of came next.
Cool. And where did it go from there? You bought your first rental property.
Yeah.
You've solved your index chart.
Yeah.
And I hope everyone has. I think everyone's seen that. That's such a real story.
Yeah.
Sitting in the bank looking at the index chart.
Yeah.
So I feel like I relate to that so much. But so you bought your first one.
Yeah.
You partnered. No big legal contract.
Nothing. Just a piece of paper. Piece of paper, signed it. We're in together.
Okay.
The second one, I went to my brother-in-law and I'm like, hey, look, you know what? We should buy an investment property. So we're like, all right. So we bought another one in Toronto. It was a 2-unit as well too. And I don't think I really cared whether it was legal or not legal. I wasn't in like any of the real estate investment clubs. I didn't understand all that stuff. It was just like, I don't care. There's 2 doors and there's 2 kitchens. Good enough. And so I got into it, and when we bought it, I did the tenant screening. And so I put a tenant in the basement. Guy shows up. I put an ad on Craigslist, if you remember Craigslist.
Yeah.
Guy shows up, and he's an older gentleman, and he's like, I'll take it. And I'm like, all right. It's, I think it was like $700 or $750. It was super cheap, it was back in 2009. And he puts the cash in my hand. And I'm like, this is just easy. Not realizing that, hey, I got to do credit check. Hey, I got to see if you're working. I got to get pay stubs. And so for a year, it was just like a pain. It was a complete pain of dealing with a tenant that said he was going to cut the lawn, say he was going to do the snow removal, and he wasn't doing that. Or if I would come to get the rent for the month, he'd be like, hey, come on inside. Look at what I did in the basement. Instead of the rent being $750, how about $400 this month? So it was just that nonstop. And then the final straw was we had a leaky faucet upstairs, and when I got the water bill, because we were paying for the utilities, I think the bill was like $900 for 2 months, and I'm like, okay, I don't know what I'm doing. I need some mentorship. I need some coaching. I need to do a reset. And so we ended up holding it for a year, and then we sold it, and that's what I did. I took a step back and said, okay, how do I actually do this properly? Because there is something there, I just don't know how to do it properly yet.
Well, I love how your story started with a friend and a brother. My story, I ran out of family, and then I had to join a club.
Okay.
Because I did it with my dad, my mom, my sister, my brother, and then I was out of family members to do real estate west, so I had to join a club.
Right.
But yeah, so you step back, and is that when you got into the education side?
Yeah,
learning?
Yeah.
Okay.
So I got into the education side, joined a club, and I just became a good student of just like listening and going to the events, and I started consuming everything and going on YouTube and listening to, whether if they were here in Toronto or they're in BC, it didn't matter where. I just wanted to learn the art of like raising capital, and Robert Kiyosaki, or just whoever it was. I just was a very good student. And once I got a good understanding of real estate investing, which back then, I mean, whether it was good or not good, but I was at least getting the education. And I realized that whether you were Donald Trump or somebody who was just trying to get into the game, you have to learn how to raise capital. And once I understood that game of like money, people, deal, then everything really kind of changed for me. And then from 2008 to 2014, I think I bought like 19 properties or something like that, somewhere around that range. And I was like, okay, I get it. It's not about having the money; it's learning how to attract the money to you.
Amazing. So
Yeah.
between 2010, 2014, you bought 19 properties.
Yeah.
Okay. And what was the strategy? Was it duplexes, triplex? Was it big buildings? What was it?
Man, this is back when you can buy a single family home.
Right.
And it worked, because we were buying them for 230, 240, 250, those work all day.
Right.
So there was no conversion that I was doing at that point in time. So it was a mix of buy and hold, and then was also doing rent to own as well too.
Okay.
Right. So that was a strategy that I really liked. And in 2010, I started my own, real estate education company. Even though I didn't really know a whole lot of real estate investing, I was getting there. But I was like, you know what? If I do this, I can now reach out to experts who I want to come in to say, like, I wasn't really doing webinars back then, but we were doing like a lot of classes. So, we'd invite people out, 5 people would show up, 10 people would show up. But I would have somebody who was an expert in, say, flipping, or an expert in rent to own, or an expert in whatever, or a tax accountant, or an accountant or a lawyer, to learn from them. And then whoever wanted to come to the class, they can learn from them as well, too. So while I was educating myself, I was also educating people who wanted to get into it, but may not have wanted to do it on their own. Maybe we're looking to partner with somebody where, I could potentially partner with them, or they can partner with themselves.
Okay.
Right?
You talked about the fear in 2008, which I want to talk about. It relates to now, but in terms of your story, I want to kind of get there.
Yeah.
So 2014, you bought all these properties.
Yeah.
Today, you mentioned you own a real estate brokerage.
Yeah.
When did you get licensed as a realtor?
I got licensed as a realtor in 2014, and so I left my full-time job in 2014.
So, and that's where I was going. So
Yeah.
between 2008 and 2014, you bought 20 properties, but
Yeah.
you were still working full time.
Still working full time. Yeah. So, and it was a great quote that I heard from Jim Rohn was, don't leave your full time job until your part time job becomes your full time job. And so I was getting up 6, going to work. I was doing 12-hour shifts. I'd come home, work on my business until like 1, 2 o'clock in the morning, get up. And so I was doing that for like 6 years.
And that's one of the biggest things that I see in this last generation of investors who have come up. Everyone's trying to quit their job right away before they're stabilized, and that's where we're seeing the challenges in today's market. So I love to hear that, like, the people who have had sustainability, almost none of them were like, I quit my job. And you quit your job and you got a real estate license to continue to earn.
Yeah.
So
that was part of it, yeah. And then also too, some of the cash flow that I had coming in from those properties was enough to cover my mortgage payment.
Right.
It wasn't enough for groceries, it wasn't enough for, other activities, but I'm like, okay, at least I won't lose my home.
Right.
That's the way that I looked at it.
Cool. So, and you've been, what's in the last 5-10 years? What's your focus been? How has it changed? Where's the opportunity for
So
Gary?
the last 5 years, what have I done? Yeah, good question. So the last investment property that I bought was in 2019 here. Then I bought a property down in Mexico when COVID hit, because I wasn't really big on the lockdowns, and I was like, hey, you know what? I want something else in another country. So I didn't buy anything here for about 5 years. It wasn't like as if I knew what was going to happen, but I did know one thing, that, man, there was no fear in the market. And so from when I was investing from 2008 to 2014, I think a lot of people forget this, there was a ton of fear in the market. When I was going into work, they're like, why are you buying another property? You're risking everything. Why do you have property number 10? What, are you crazy? Like, what that's happening in the US? They're crashed. It's going to happen here. So there's so much fear in the market. And then when 2020 hit, and I'm getting my hair cut at the barber, and my barber's giving me like tips. Like, hey, here's what you should do in real estate investing. I'm like, bro, cut my hair.
Yeah. Yeah.
And so when you start to, when it starts to become a situation where everybody wants to get into it, when you get that FOMO, I realized, like, whoa, hold on a second, this is crazy. And then when you start seeing homes go to 20%, I think what 1 year, I think it was like 27 or 26%, that is a huge red flag. So what I had to do with a lot of the investors that I was working with, because we were still doing a lot of real estate investing, was I had to move them out of the city, and I moved into Peterborough. We moved into Peterborough, I think, 2017, and all we ever focused on was cash flow. I didn't get caught up in the condo market. I didn't get caught up in speculation. And I think, fortunately enough for me, was that the coaches and the mentors that I had early on in those years were some of the coaches and mentors that I got hurt in the late 80s, early 90s. And so when you get crushed like that, or you get impacted by that, or if you've seen it, you then warn people about the dangers of real estate investing, and that there are fundamentals to pay attention to. And I just paid very close to the fundamentals.
So what are you seeing today then? That's kind of what I'm kind of going off topic here, but
Yeah, but what am I seeing today?
what do you
Am I
see
seeing opportunity?
Yeah.
Yes, yes. There's some incredible opportunity out there. And the reason why is because there are so many people now that are trying to get out of the market. We get leads that come in on a daily basis of like, I want out, I want out, I want out. The problem is they can't always get the price that they want to get out. And then there's investors who are a little bit more sophisticated that are like, hey, I want to get in. But the numbers have to make sense. And so that's what I'm seeing right now. People, when the market is in fear, I think that's when there's some good opportunity, but you also have to be educated on realizing it and understanding it. Where are we now? Yeah, we're in that bottom part of that bowl. I don't know. I don't know where.
Yeah.
Do I think it's going to continue to go down? Probably. I think with the latest government change with that HST, now we're saying, no HST for the next year or so. That's deflationary. So that's going to put more downward pressure on the market. You'll see that now, obviously, in new construction or inventory homes, and that'll continue to put some downward pressure on resale homes as well too. But it doesn't mean you have to wait. It's all about making a good purchase and having good negotiation skills, or having a good realtor that can help you negotiate properly.
Yeah.
Right. So
Peter behind the camera watched me do a presentation about 2 weeks ago. I was like, I don't know if we're here. I don't know if we're here.
Yeah.
But we're somewhere in that range.
Yeah.
And one comment I'll make, and I love your feedback on this, is I like what you said about the HST, deflationary.
Yeah.
The other side of that is it is, from the retail perspective, it's good news in real estate.
Yeah.
Now, we know that it's a deflationary economic perspective, but in terms of the retail investor, it's a sale on real estate.
Yeah.
That's good news, which so much of real estate is driven by customer sentiment.
Yeah, absolutely.
Right? So it's an interesting perspective where you say, well, it's deflationary, but on the customer side, they're like, oh, this is a good thing. There's a good news real estate headline, which we haven't seen in a while.
Right. Yeah. And there's right now so much negativity out there, right? And so much uncertainty, right? Of the war that's happening, and oil prices are going up, and is inflation going to be coming back, and the bond yields are going up, and so you get all this negative stuff, and people are just like, I want to stay put. I don't want to make any big moves right now with uncertainty, and especially with interest rates and how fast they went up, during 2023, 2024, that sticks to people's mind.
So we tend to talk a lot about the real estate investing strategies. What other strategies are you focusing on? Any other strategies right now?
Yeah, so the strategy that I'm focusing on is, like, I've got investments. For the first time in 5 years or 6 years, I'm actually now looking at actually getting back into the market. I know a lot of investors are actually leaving and going down into the U.S., but I still think there's incredible opportunity here. You just have to know where to look. Again, like I mentioned earlier, I'm big on fundamentals. I'm looking at what's happening with infrastructure, what's happening with population. Is the city that I'm investing in, is the population going up or is it going down? Is job growth going up or is it going down? So I'm definitely looking now to potentially pick up some investment properties. And then also, if any turnover is happening, I've got some turnovers that are happening right now because rents have come down. So some tenants now are actually seeing some opportunity where maybe they're paying $2,500 or $2,600 for a home. Maybe they can get it for maybe $22,000 or $23,000. So there's opportunities out there for them to move into something cheaper, which then allows me, anytime I buy a property, I always want like a separate entrance to now take that single family home. Because again, even in Peterborough, we were buying single family homes that were working in 2017 for like low 200s, high 100s, if you believe it or not. And so when they leave, and with the, a lot of the changes that happen with the bylaw, where you can, now convert a single into 2-unit, and now you can put garden suites in, we're seeing those opportunities. So now I'm looking at converting that single family into a 2-unit, putting garden suites in the back. So I'm seeing a lot of opportunity in higher and best use. right? And again, I stay away from condos. I think a lot of people will stay away from condos as well too, because there's nothing you can do with the condo once it's done. You know, somebody leaves, maybe you can go in there and paint and change some flooring, but that's it. That's your highest and best use. Where if I have land, this is a great terminology. That's why they call them landlords, right? They're lords of the land. When you own land, that's where you're really building your wealth, because the land is what appreciates. The house is a depreciating component unless you're keeping it out.
Yeah, the bricks and mortar go down.
Yeah. So I want the land. That's what I'm buying. You know, and that's one of the things that my dad had told me when he didn't have the money to do it, but he's like, man, if I have some money, I'll buy some land. Man, if I have some money, and I'm like, okay, that stuck with me. It's like, okay, there's something in land. You know, so I love land.
I like the condo thing, and I think so many people just get caught up. Well, I can afford a condo.
Yeah.
And I don't deal as much with first-time borrowers as much on the broker side, but I tell my agents, like, if somebody's coming to you with a condo, talk to them about a duplex. I don't even think they know that they could use the rent to qualify.
Yeah.
But most people just buy a condo because it's cheap. Well.
Yeah, it's cheap, and they don't have to kind of worry about it right now. They can worry about it 5 years from now. But, you know, to me, it's a speculative. I don't know where interest rates are going to be. I don't know where the market's going to be, you know. And then number two, I'm not getting any cash flow, so I'm waiting. And then number three, I'm not getting any mortgage pay down.
Yeah.
You know, and I think, you know, unfortunately, if you're not educated to really get it, but here's the problem, is that Uncle Bob from 2010 was crushing it in the condo game. So then Uncle Bob's like, now's the time to double up. We got to double up. It's 2020. Let's go.
Right.
Finally, Uncle Bob was wrong.
Yeah, Uncle Bob was not doing so well right now.
No. You know, so.
Okay, so you mentioned your highest and best use in your existing portfolio.
Yeah.
You're looking for other duplex garden suite opportunities?
Yeah.
Is that what you're?
Yeah. So we're looking, kind of focusing right now out in the Peterborough market, a little bit in the Durham as well too. I like Durham as well.
Right.
And also in Toronto, right? Now for Toronto, you need deeper pockets.
Yeah.
Right. But you can turn a single family home into, I think you're up to like 6 units now. I don't know if you can do 7 with a garden suite. Now, just because you can doesn't mean you should.
Right.
So you got to make sure, like, do the numbers make sense? And also, how big is it and where in Toronto? And is there a market for studios or a 1-bedroom? And so you got to be cautious. You got to pay attention. And I would say number 2 as well, too, to add to that caution is a lot of developers now have moved from building condos because people aren't buying condos to now purpose-built rental. And so now you're going to see a flood of rentals hit the market. So whatever you're getting into, just be very careful and really kind of pay attention to that you're running your numbers and running them properly.
You mentioned something about just because you can do something doesn't mean you should, and how many units you can max out on.
Yeah.
I had a dinner with a colleague the other night, and he's building 12 units in Brantford.
Okay.
And we were having this conversation. He's like, we can really push it to 12. And I was like, and I'm not saying I know, I'm not looking at your deal.
Yeah.
But you're going to have 12 relatively small units. You're also over 10, so you need to go full site plan.
Yeah.
Have you looked at what 9 units right now, 9 nice 2-bedroom units with a den and an in-suite laundry? Have you ran a pro forma on 9 versus 12 small by saving site plans, saving all this stuff, and really running at what the absorption on those units are? Because if you have 12 smalls versus 9 nice 2s, it might be interesting for you to see what those numbers are.
Right.
The other point I want to throw out there is we've actually seen, this is kind of a different conversation about just because you can doesn't mean you should. Just because you can get 6 units on a lot doesn't mean it's functionally buildable. So we've actually seen a couple of these bigger projects that have had to be scaled back because they've been approved for more, but like the contractors get out there and be like, we can't actually build this. Like your neighbor needs to tear their fence down and let us work on their property in order to build yours.
Right.
And if they won't consent to that, like we're gonna have to crane everything. Like your build costs are gonna be ridiculous. So just because something can be approved for it doesn't mean it's like functionally buildable. And something that people really got to keep an eye out for.
Yeah.
Right now.
Yeah.
I don't know if you ran into that on the garden suite side of things at all, but I've seen this a little bit more lately.
No, not where we're doing it. You know, like I don't know if you've ever been to Peterborough, but man, there's a lot of detached homes and there's a lot of large lots. And also too, prior to doing that, you know, we do. I've got a team that we've been doing this for a long time, where they understand how wide the driveway has to be. They understand the setbacks when you're doing your garden suites from, you know, from the fence, getting that plumbing into the home or the structure that's there already. So there's a lot that goes into it, and then we've got a really good team out there. So I'm always big on partnering with the right people, having the right team around you, because you know it's not an easy game. You know, I saw a lot of agents come in from Toronto into Peterborough, and they don't understand, you know, the lay of the land there. And there's a river that runs right through there, and all of a sudden now you're buying a property because it's a great deal. It's been sitting there for 30 days. You don't understand in the peak of things. Oh, guess what? You're in a flood zone. Done. Right. So you got to make sure you're going out with people that understand that market, that city. And I get it. You know, your aunt who's a realtor, your uncle who's a realtor might give you a bit of a kickback, but you know, now you've bought a property that you can't do anything with. So you got to be careful.
That kickback's not going to cover the.
Yeah.
You better hope you're insured.
Yeah, I got to sell this property now. What am I going to do with it?
Yeah.
All right.
Cool. What kind of talk a little bit about the hard truth here. Mm-hmm. For a newbie investor, somebody brand new, maybe they own their home, but like they never invested in real estate.
Yeah.
What's the hard truth?
The hard truth. So as a newbie, as a real estate investor getting into the market, the hard truth is this. Is that most of you will not have the money to grow a portfolio that you may want to, meaning that you will run out of money eventually. It doesn't matter if you're Donald Trump. It doesn't matter if you're Robert Kiyosaki. Everything is partnership. It's always about partnerships, right? And so I think if you're partnering with the right people, and this is a whole nother podcast just on how do you raise capital, how do you find the right joint venture partner, because it's not only just about the money part of it, it's if you're partnering with somebody, that is a relationship, that is a marriage. Sometimes that can be even longer than your marriage. So you want to make sure that you're getting into bed with the right potential joint venture partner. But don't look at, I don't have enough money in my bank account. How can I buy an investment property? Learn number two things, mindset and how to raise capital. And if you do those two things, then you will get to a point in your life where you never have to worry about money again.
Amazing.
Yeah.
Amazing. I love the partnership thing that you said.
Yeah.
I'm going to add to that.
Yeah.
This is something I've done several partnerships over the years. And one of the rules that my wife and I, when we do a partnership with somebody else, we go out for dinner with that person.
Right.
Yeah. Should your first date, you usually go out for dinner, right? Yeah. We're going to get in bed with this person or couple. We want to know them. And one of the things that we always talk about at dinner is religion and politics.
Right.
And I could actually care less whether we agree on the religion and politics. I want to know, can we disagree and have a conversation about it?
Right.
Can we find a common ground on it? Typically we do agree, and that's good, but if there's a point of contention, let's get to that right out of the gate, because we're about to marry money together and time and resources for the next 5-10 years.
Yeah.
We want to make sure that we can have a tough conversation and still order dessert and a coffee and get out of there as friends. So that's absolutely. A little tip I'll add on to the end of the partnership thing.
Yeah, absolutely. And I think what's really important as well too is that there can only be one cook in the kitchen. And I think that's where a lot of times they don't have that difficult conversation at the beginning of who's doing what. It's so important, right? And I've gotten to the point too where like the very first thing that I want to do is I want to make a list of what I want in a partner and what I don't want in a partner. And then when I have that conversation with them, I'm making these mental checks in my head. I'm like, okay, so far everything is checking. And then the last question is like, who do you want to manage the property, you or me? And I'm saying, look, if it's going to be me, just so you know, right? If that fridge breaks down and I like green fridges, we're getting a green fridge. If not, you can manage it and you can call the shots. And a lot of times they're like, no, I don't want nothing to do with it. You deal with it. You deal with the tenant. You deal with the issues. Right? Of course, I'm not going to buy a green fridge.
No.
But I'm just letting them know, like there's got to be one cook in there. Am I going to let you know what's happening? Of course, I'll give you a high-level overview. But at the end of the day, I'm calling the shots.
So let's just clarify on that, because I see so many people trying to get into partnerships.
Yep.
You're the active partner. You bring the money partner.
Yep.
The active partner does the deal.
Yep.
And the money partner does the money. And that's it.
That's it. Yeah. Go take your daughter to soccer. Go watch the Raptors play basketball, right? Like, you go do your thing, because the money partner is the money partner. Let me do everything else, from making sure that, the books are where the books need to be, from an accounting standpoint, from a tax standpoint, the tenants, the screening, the construction. There's a lot of moving pieces to that. Let me deal with that, because I've been doing it for a long time. I understand how that works. You continue on with your life, your 9 to 5, unless you want to venture into that world. But a lot of times they don't want to. They just want to see their money, build some wealth for themselves and for their family.
Yeah, they think they do.
They think they do.
They do, until you lay out what my job actually is. This is what I'm going to do. It's like, no, green fridge is fine. Fine. I don't have to look at it. So
they appreciate the tough conversation. Listen, I've got a partnership with a real estate partner of mine, an investor as well too, and he calls the shots. I know just as much as he does. But I'm like, no, you call the shot, and you're like, hey, look, we got to get a new roof. Can we make it stretch for another year? No, we got to do this year. All right, cool. But we made that decision right from the beginning.
How are you on? I'll admit, admittedly, I struggle. I'm not a good passive partner.
Okay.
I guess I'm a control freak. I've been the active partner for so long.
Yeah.
How has that transition been for you?
Great.
Great.
It's one less thing for me to worry or not worry about.
I guess it really depends on who the active partner is. You trust this person, just like your partner.
100%. Exactly. It goes right back to like what I said before, right? It's a marriage. You are in a marriage, and so there has to be trust there.
Cool.
Yeah.
Cool. So I guess you kind of answered for both, but is there a different hard truth you would say for like the more experienced person who wants to go to the next level, thinks they need to go to the next level? Maybe they bought their 5 properties, they're thinking about leaving their job. Like, what's that hard truth for that person?
Here's the hardest truth for that person, because when things are good, during good times, there's a great quote that I don't know if it was a quote or not, but anyways, I heard it, like, keep strict accounts. And when you're growing a business, or if you're growing multiple businesses, what ends up happening is when that money starts to flow in, you start to like, oh yeah, this is good. And you start investing in other things or bringing on employees, or all of a sudden now you've got like subscription and memberships. And if you're not keeping a strict account, you always wonder like, well, how did that person that was successful, who was like, looked like he was like a multimillionaire in different businesses, how did they go bankrupt? Strict accounts. That is so important, and that's one of the things that I've learned over the years with the different businesses that I've started, is you got to keep strict accounts.
So you say strict accounts, you mean like make sure that company stay, like,
whether it's a company, whether it's your real estate portfolio, whatever it is, you got to know what's going on, right? Even if you have a property manager, I want to see everything eventually, whether it's every month or every 6 months, or like, I need to know what's going on and then compare it from the previous year. I want to see everything. Yeah. Is it time consuming? Yes, but it's your business. It's you gotta treat it like a business, right? And I think that's where a lot of people make the mistake. And if you can't do it, like, I'm not great at that stuff, but I make sure that I have somebody with me that I trust that can manage that finance piece. Right. So I know my strength and my weakness. That is not my strength. So I make sure I've got somebody there that can explain it to me. I can understand it. I can go through it myself if I want to, very high level. But strict accounts is what crushes experienced real estate investors. We know it. We've seen it over the last 2 years. Right. So a lot of people who, I've been doing a podcast for a very long time. A lot of the ones that came on the podcast that just started, their real estate investing journey, and all of a sudden now they became a coach. Like they're gone, and I get it. It was a great time, but the accounts were strict and they were growing too fast, too quick.
I actually just saw a clip, and I haven't read it yet, and I downloaded it on Audible. Profit First.
Yep.
I don't know if you read that book.
No.
It basically says that most people they do, the profit is income minus expenses equal profit. But you actually need to go income, pick your profit, and then run your expenses to make sure you take that profit first. And I think a lot of people, in terms of the strict account terminology that you're using, is they're just income, expenses, how much is left? Oh no, that's not enough. Like you actually, if you're looking at a profit first and planning on taking that profit off the table, you now become more cognizant of your expenses. So I literally just downloaded it. I haven't read the book yet, but I saw that was the AI summary of it.
Okay,
So,
all right.
I want to, well, I'm going to ask one more question. I think we got a minute, couple of minutes.
Yeah.
How are you using AI? Are you using AI?
I am using AI.
Because I meant to talk to our last guest about that too.
Yeah.
How are you using AI?
I'm not using it to the level that I want to use it to at this point in time. 'Cause, I mean, listen, man, I don't know if anybody is. It's coming so quick and so fast. But I'm definitely using it, right? Whether it be for ideas, whether it be for responding to emails, whether it be, what's the new one now? Cloud. Yeah. I love that because now you can create agents that'll actually go into your email or going to say maybe follow a boss or to do different functions within your computer. I mean, I don't even know where it's going to be in the next couple of years, but I definitely do use it. And I have my team using it, and I have operations and admin that's using it. And so they're actually showing and teaching me some of the stuff that they're using, whether it be for social media, so there's a lot of components to it. But I think to add to that, and I think where some people are getting concerned is like, well, yes, it will replace jobs, but I still don't think it's going to replace this. I don't think that'll ever replace that. I call a call center and I'm talking to some AI personnel and I'm like, operator, or you start cussing at them like, I don't want to talk to you, okay? And you will never talk to another, well, maybe you could, but you most likely you're not, yeah, you shouldn't. You're not going to talk to somebody like that because they're not real. Yeah. So you don't give them any kind of level of respect. So this will not go away. I think for real estate, yes, it'll enhance what we do, but it won't replace this.
Yeah, it's I had my team huddle, our Monday morning huddle this week, and I literally said to everyone on my team, I want on Thursday when we come back for our Thursday morning huddle, tell me 3 ways you used AI to improve your process.
Yeah.
And literally, it was funny. During the call, a couple things came up, and people had never heard say, like, well, I just plugged it into ChatGPT and it gave me this answer. And I was like, and what'd you think of that? They're like, I actually, this was really good. This would have taken me an hour to go figure out, and just using it as a tool to accelerate. I know this is becoming overused, but I heard it 5 years ago, or maybe 4 years ago now, that it's not that AI won't replace humans, but humans who use AI will.
Yeah.
So humans who are using AI as a tool. One lady, a lovely lady on my team, she's like, I'm scared of it. What are you scared of? What's the fear? Well, I don't know. So I showed her. I did a project with her earlier this morning, and I showed her. I said, "How long do you think this took me?" She's like, "I don't know. How long are you working on that?" I said, "Here's the prompt I plugged in 5 minutes ago, and it created this whole thing." She was like, "Oh my God. Oh my God."
Yeah.
That's unbelievable. I can't believe it did that. I said, it's just about accelerating things. So we could have a quicker conversation. This would have taken us a week.
Yeah.
We talked about it this morning. I took a 5-minute prompt. Now we're already running through this, and you have direction. Like, what does that mean for our business? So kind of talking about AI, where do you see, is your crystal ball here with you? Did you bring it?
I always bring it.
You bring it? Where do you see things going? I know we talked, now maybe a little up, a little down. Where do you see things going?
In regards to the market?
Real estate, market, AI, whatever.
Great question. I think we are moving into a renter's nation. One of the things that I've done, and I'm really big on this, I think it's so important, like when I go back and take a look at, like I've done newsletters on a weekly basis starting back in 2010. I wrote every single newsletter every week until 2020. Now I got a team that helps me with that, and they still go out. And every year that I looked at it, and those newsletters, it was always like, here's a new change, it's never gonna be the same. Here's a new change, this is gonna change the whole real estate investing game. Where I'm going with that is that it's always about pivoting and adapting. And so I don't know where things are always going to go, but the one thing that I always do, and I'm always happy to do, is pivot and adapt. And I've brought on some new real estate agents on my team in the last couple of years, and they're like, Gary, it's now a good time to get my real estate license. I'm like, damn right it is. The reason why is because you'll now know what you need to do to win in this market, because when the good times come again, then you're going to crush that market. And when the bad times come again, you're like, oh, I need to actually pick up the phone. Oh, I need to go door knock. Oh, I need to go do open house. Oh, I need to go do the things that I need to do. So where is it going? I think things are going to be happening much quicker, much faster. And I think the faster you can pivot and adapt and not complain, then you'll win the game of whatever market that you're in. That's it. And multiple skill sets, not one skill sets, multiple. Right.
And what do you mean by that?
Well, what I mean by that is, well, I'm a real estate agent. I know how I've done marketing. I'm a podcaster. I own a real estate brokerage. I have a real estate lending company called Deep Pockets. I own a real estate education company. It's just so I used to be in IT. I never did sales before. So I've done so many different things. And I learned this from Jim Rohn, is like multiple skill sets.
The question I would ask you there, because sometimes people ask me this, and I know how I navigate, but I'm curious how you do.
Yeah.
Gary, you have so much going on. How do you handle it? You have all these different things.
Yeah.
I know what my response is. What's yours?
Yeah, great question. It's called Eat That Frog. It's a really good book by Brian Tracy, and what you got to do every day is you got to do something very difficult in the morning. So this morning I did yoga. I got up at like 5:50. Most people don't want to wake up that early. I don't want to either, but it's about consistency, and it's about discipline. And so then I will do 2 to 3 hard things in the morning to win the day. And the rest of the day now becomes easy. And then number 2, I don't trust my memory. So anything that I'm going to do for the day. So Monday, this was, I think, hard for us to kind of get together. I think we've been trying to do this stuff for a very long time. The reason being is, so like there's certain days, like Monday is my CEO day. I made an exception today where I don't leave the office.
Right.
And that is how I win the week, because I plan the whole entire week that day. And I take very limited calls. I'm working on that business. And then Tuesday, there's other things that I got to do. And then number 3 is I don't live in email. And I don't have notifications on my phone. If the world's gonna blow up, somebody will tell me, or I'll find out in the afterlife that, oh, wow, that was pretty quick. Oops.
Your
Right.
notification wouldn't have saved you anyways.
Right, but I need less distraction in a world that's full of distraction, right? So Instagram, Facebook, all those notifications are off. I go into it when I want to go into it.
How do you manage email?
I do it twice a day.
Twice a day?
Look at it in the morning, and then I look at it maybe around, say, 7 o'clock at night. And then anything, if I'm replying to anybody, it will be sent out in the morning. So I will have it scheduled. I will not reply to somebody at 7, 8 o'clock at night. Right. Because the last thing, I used to, but then now people start to reply back to me. And now I'm going back and forth in email. So they know that I will get back to them within 24 to 48 hours. And then if I need to, I've got people who can scan my email for me as well, too.
Do you have an EA managing your email or notifying you of?
No, but if I need to, I can always have somebody, hey, can you just take a look at my email to see if anything important comes in? But, and the other thing as well, too, is that I don't have anybody that leaves me a voicemail. Like everything is text, and I tell them specifically. So if you direct people in what you want them to do, so that you can manage your day and win your day, you'd be surprised. People will listen,
yeah,
and they'll do what you want them to do. And the reason why is because I want to make sure that I'm getting back to you in a timely manner, or to be able to run my business properly with everything that I've got going on.
Right.
Yeah.
Amazing. Gary, that was awesome. I know I learned some things. I love talking to people who have a lot of stuff on the go, but have it reined in.
Thank you.
And one of the things that we're really trying to emphasize is sustainability in real estate investing.
Yeah.
And you're the epitome of that. You've been around for a long time, and just running a somewhat boring business.
Yeah.
Right.
I like boring.
That's the boring, sustainable stuff. That's what that works really well. Well, make sure we share your contact information so people can get hold of you. And connect.
Awesome.
And once again, thanks very much for being on. And
thank you
guys. Smash that like, follow, whatever Peter tells me to do, and we'll see you guys on the next one.
Awesome. Thanks for having me on.